Hi guys, welcome back to TipRanks. My name is Annika and I love to hear what you guys think of different stocks you're looking at. We at TipRanks would love to hear from you. Today we're looking at 3 stocks that Cathie Wood added to Ark Invest portfolio. Ark Invest is a $75 billion asset manager. And Cathie Wood is one of Wall Street's most influential investors because of her stock picking power and the proven track records of returns that she has shown for Ark Invest. So to confirm that these are buys, I looked at the TipRanks database and all 3 of the stocks that she added to the Ark Invest portfolio are deemed strong buys with great upside potential. The first stock is WalkMe and its ticker is WKME. WalkMe is one of the high-tech world's unicorn companies. WalkMe is currently valued at $1.8 billion and it holds a niche in the software as a service segment. The company provides a code-free digital adoption platform that provides users with in-software instructions for web, mobile, and desktop apps. So basically, WalkMe's product walks users through the app. The company says that it reduces sales and conversion rates, and it also reduces the cost of support centers. They also improve end users' experience and productivity. The current price for WalkMe is $23.04, and the analyst rating consensus is that it's a strong buy. It has an analyst price target of $36.80. This is a 59.72% upside based on 5 Wall Street analysts offering 12-month price targets. WalkMe was launched back in 2012 but went public earlier this year, taking advantage of the summer's bull market. The company put 9.25 million shares on the market and raised $287 million. Thousands of leading enterprises also use WalkMe. Some of these include Walgreens, IBM, Microsoft, PwC, Okta, Twilio, and many more. Earlier this month, WalkMe released its Q3 2021 report, its second such release as a public entity. The company reported $46.1 million at the top line, and this was up 30% year over year. And the non-GAAP net loss per share moderated sequentially was from 16 cents to 13 cents. The company finished the quarter with a negative free cash flow of minus $12.9 million, but it still counted $361.9 million in liquid assets on hand. Cathie Wood is bullish on this unicorn's prospects, and her fund acquired a position in WalkMe in Q3, and they snapped up around 118,336 shares. At current valuation, these are now worth $2.62 million. The SMART score is a 7 in that it is neutral when it comes to outperforming the market. However, the analyst ratings are a strong buy and TipRanks investors are very negative, but news sentiment is bullish and hedge fund activity increased. 5-star analyst Patrick Walravens from JMP Securities deems it to be a buy with a $39 price target, which is a 69.27% upside. He wrote that, overall, we see WalkMe as an attractive opportunity for long-term capital appreciation for several reasons, including its digital adoption platform makes software easier to use and deploy, a compelling value proposition for employees and enterprises as reflected in our due diligence with 9 customers, 89% of which will expect to increase their spending on WalkMe over the next 12 to 18 months. The company addresses a TAM that it estimates could be as big as $34 billion and accelerating growth as the company comes back from the pandemic, shifts increasingly upmarket, and begins seeing the benefits of sales and marketing investments that restarted in Q4 of 2020. The second of Cathie Wood's picks is Cognite Software, and its ticker is CGNT. Cognite is actually a spin-off company that started trading independently back in February of this year. At that time, it was spun off from Verint to handle the parent company's defense-related intelligence and cyber activities. Since then, Cognite has taken on the challenge of providing high-end solutions for cybersecurity threats and data protection. Cognite announced its second quarter results, and their revenues have slipped slightly since it started its independent existence. Their revenue was $116 million of Q2 2021, but their revenue was $116.4 million in the previous year-ago quarter. Even though the company's revenues have slipped, the company's EPS loss has moderated from 36 cents to 17 cents. But it's important to take into consideration that the company's fiscal Q2 2021 results beat market expectations, and that an increase in software-related revenues have pushed the gross margin up to 72.3% and helped increase profits by 16% in the second fiscal quarter. The current price for Cognite software is $21.43, and the analyst rating consensus is that it's a strong buy. The analyst price target is $34. This is a 58.66% upside based on 3 Wall Street analyst ratings offering 12-month price targets. So since it's a cybersecurity company with a solid reputation, this drew Cathie Wood in. As we can see, it is part of Ark Invest portfolio. Ark Invest bought 152,667 shares of Cognite in Q3, and the value of this holding sits at $3.9 million. The TipRanks Smart Score is a 7 in that it is neutral when it comes to outperforming the market. It is, however, a little bit skewed towards outperforming the market. Analyst ratings are a strong buy. TipRanks investors, however, are very negative. Blogger opinions, however, are bullish, and hedge fund activity has increased despite technicals being negative in some areas. Mike Sikos from Deem has given it a price target of $36, which is a 67.99% upside, and he deems it to be a buy. And he says that we attribute the sell-off in shares to the larger Q4 revenue hurdle for management to achieve its full-year target. And he says that we attribute the sell-off in shares to the larger Q4 revenue hurdle for management to achieve its full-year target. What's important to note is that there is a shift in revenue fulfillment from Q3 to Q4 based on a few customers' request to delay delivery of Cognite software solution based on customer readiness. It's based on customer request to delay, not based on Cognite's operations or ability to deliver. We continue to believe the post-earnings sell-off and subsequent pressure on shares is overdone. The third stock from Cathie Wood's picks is INVZ Technologies, and its ticker is INVZ. INVZ is a producer of LiDAR systems for the automotive market. These advanced sensor systems, so LiDAR stands for light detection and ranging, were originally developed for cartographic applications, which would allow aircrafts and satellites to create highly accurate topographic maps, but they have been adapted by automobile manufacturers as the eyes of the cars, and now they are vital technology in the autonomous vehicle niche. INVZ's products, INVZ 1 and INVZ 2, are solid-state LiDAR sensors, specifically designed for automotive applications. They are rugged, lightweight, and are compatible with level 3 to 5 autonomous vehicles. INVZ 1 is on the market now, and INVZ 2 is scheduled for launch before year's end. The products have market applications in a range of niches, from trucking to robo-taxis, to consumer vehicles, and even in industrial drones, sidewalk delivery tech, and heavy machinery. The company reported its Q3 2021 earnings on November 10th, and since then the stock has started reversing its year-long decline. The quarterly report shows us progress on key automotive programs. Importantly, INVZ 2 showed us higher performance than INVZ 1 and can now be provided directly to customers with INVZ as a Tier 1 supplier. The engineering samples for INVZ 2 will be available before the end of this year. So looking at the financials, the company reported $2.1 million in total revenues, and this was an increase of 106% compared to Q2 of 2021, and an increase of 13% compared to Q3 of 2020. The company also had $139.6 million in cash and $185 million in short-term deposits, compared with $58 million in cash as of September 30, 2020. The increase in cash was related to the closing of the company's business combination transaction earlier this year. The company also continued to invest in R&D, with R&D expenses totaling $20.6 million for Q3 of 2021, of which $3.7 million was attributable to stock-based compensation compared to $14.7 million of R&D expenses incurred in Q3 of 2020. It's important to look at R&D expenses when it comes to futuristic companies that are providing best-in-tech type technologies and products. This is because the R&D tends to provide delayed gratification. As they start developing highly innovative products, we can then see them market them and potentially gain market share. This can eventually lead to share price rallies, which is why it can be quite important to look at R&D when you're looking at a highly tech-based or innovative company. The INVZ technology stock price is $7.30, and the analyst rating consensus is that it's a strong buy. The analyst price target on INVZ is $10.33, which is a 41.51% upside. The TipRanks Smart Score is that it's a 4 in that it is neutral when it comes to outperforming the market, but it's more skewed towards underperforming the market. The analyst ratings deem it to be a strong buy. TipRanks investors are, however, very negative. Blogger opinions, however, are bullish, and news sentiment is also bullish. Technicals, however, are negative, and the return on equity is also negative at negative 51.36%. Cantor Fitzgerald analyst Andres Shepherd deems it to be a buy with a $9 price target, which is a 23.29% upside. And he says that management noted in Q3 call that they are in late stages negotiations with another large automobile manufacturer and competing only with one other supplier. We think landing this opportunity would result in significant upside. He also said that while management appears more focused on applying their LiDAR solutions primarily to passenger vehicles, we believe that the technology could also complement other applications such as radar, traffic lights, cameras, agriculture, etc. Overall, the total market opportunity continues to be quite large. Cantor previously calculated a $4 billion TAM, and we continue to believe this is conservative. So guys, what do you think of Cathie Wood's stock picks? I've always followed all the picks she makes for Ark Invest, and she's shown a very good track record from the past. So leave below in the comments what you guys think. I'd love to hear what you guys think of these particular stock picks and if you guys are bullish on them. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. I'll see you guys in the next video. Bye!